Okay, you're welcome to today's lesson, accounting lesson. I want to believe you have been enjoying the previous lessons on accounting. You know, as a student preparing for exams, accounting related exams, we encourage that you find time to visit the exam guide and then see how you'll be able to solve related questions based on these various lessons. It's not just to put these lessons together for fun. It's not a business actually. It's just like a platform to encourage students to read and prepare adequately for exams. Today we have something very important. We are going to look at a topic that as long as trading profit or loss account is concerned, if you don't understand this topic, when it comes to additional information, you will not be able to answer the questions there, because at the point when you are preparing your trading profit or loss account, there is a section that is called additional information. They will give you the trial balance, and there is a part that is called additional information. That additional information part is what gives birth to this particular topic we are going to look at. The topic is provision for prepayment and accruals. Provision for prepayment and accrual. Let's quickly look at our lesson objective as we make progress. What are our objectives? Number one, we'll be able to define and differentiate between prepayment and accruals. We want students to understand the difference between prepayment and accruals and explain how to post prepayment and accruals into the various ledger, and then we solve related problems from the exam guide. Let's quickly look at what prepayment is. Prepayment is basically money paid for a service or right you have not enjoyed. What did I say? I said prepayment is basically money paid for a service or right you are not yet enjoying. You have not yet enjoyed. You are just probably a student and you are living in a safe con, and some good money just pop into your pocket. Maybe a 500,000 just hit you from a scholarship program, and your house rent is 200,000, and you are not from a very strong family or from a very strong background. What will you do? This 200,000 is your house rent, or probably let's assume your house rent is 100,000. You can decide to say, fine, from this 500,000, I'm going to pay for my house rent 3 years, and you take 300,000 out of the 500,000 for your house rent. As you have paid, that 2 extra years that you have not lived in that particular apartment represent your prepayment. So basically, prepayment can either come in the form of an expense or it can come in the form of an income. You can either pay ahead of the right, or you can receive ahead of maybe a service. You are working in a company and something come up, you want to get salary advance. They call it upfront. You want to pay, you want the company to pay you, months ahead of the months you have worked. Like this is January now. You want them to pay you February, March, April, 3 months. That's also prepayment. So we are going to look at them one after the other. Let's start with what we call prepaid expenses. What are prepaid expenses? Prepaid expense is the payment for service in advance of their use, like I mentioned earlier, where the payment is made in respect of a period beyond the date of account. It is referred to as prepaid expense. The actual amount for the period is debited as expense in the profit or loss account, but the extra amount paid for the next period is treated as a current asset in the balance sheet. I want to explain this a bit. Now, account is prepared based on periods. It runs from January to December. That's the standard. But some companies' accounting year run from February to January, March to February, April to March, But what you should know is that whatever it is, it has to complete 12 months. So whenever payments are made beyond this period, the extra payments that are made, that one becomes your asset. Why is it an asset? It's an asset because tomorrow you can decide to say you don't want to do again. They should give you back your money, and it becomes your money automatically. So it goes into your current assets. Go into your statement of financial position as your current asset. We are going to look at an illustration that will help us understand this. So the following transaction was extracted from the books of Nelly Limited. Rent prepaid 1st of January 2014 is 600. Rent paid 31st December 2014 is 3,000. And rent prepaid 31st December 2014 is 400. You are required to determine the amount chargeable to the profit or loss account and balance sheet as current asset and post the transaction to the ledger. What are we saying here? Number one, you can actually pay last year for this year, pay this year for next year, or you can either pay last year for this year, or you pay this year for next year. In this question, let's start. Now, we said rent. You have your rent. You have your rent. You have your rent. Amount paid. Amount paid. Let's put our Naira sign. The amount paid. This is the amount paid for the period. They said at 31st December 2014, you will paid 3,000. 3,000 is what we pay. And then they said rent prepaid 1st January. You know that this rent prepaid 1st January is what is actually paid into what? This year. It was actually paid 2013 for this year. Because any money that is prepaid by January, that means that that money was actually meant for the current year. So you are going to add what was paid last year for this year. So you add prepaid, January 1st, 2014. How much is that? 600. So you have 3,600. And then to your rent prepaid 31st December, as at 31st December, you are paying 400. That 400 is meant for 2015. So you are now going to less prepaid 31st December 2014. How much is that? 400. So what you are going to be left with is 3,200. This 3,200 is what will go to your income and is what will go to your profit or loss. Go to your P or L account. P or L. That's what we now, this is the amount that will now go to your P or L as the rent paid for the period. Why? How much? What amount? Which of them will be posted to your balance sheet or statement of financial position as your current asset? Remember, they said you should determine the amount that is chargeable to your profit or loss, which is this amount. And then they said you should also determine the ones that will be taken to your balance sheet. The one that will be taken to your balance sheet is this one, because this is the one that is taken into next year. And then the last but not the least, they say you should post it to the ledger. The ledger is a very simple account to prepare. We just come down, write your rent account. This is your credit side. This is your credit. This is your debit. And then this is your Naira sign. Now the amount that is paid last year into this year will come here as your balance brought down. Your balance brought down from last year into this year is 600. That's it, 600. Now the amount that is paid for this year is called cash. That's this cash. So that amount is how much? The one we paid at 31st is 3,000. And then the one that is paid into next year is what will come here as your balance. Your balance carried down. Balance carried down is what is going to next year, which is 400. And then your P or L is simply here plus here, which is 3,600 minus 4 will give you 3,200. So you have 3,600. So your balance brought down, which will go to next year, is 400. You have done the ledger entry. This is how to now post the rent account into your ledger. At this point now, this one is what will go to your balance sheet. All right, let's go to the next one, which is your prepaid income. Now, if it is prepaid income, how is it different from how your prepaid expenses are treated? I said prepaid income is simply the receipt of money or revenue in advance of service you are yet to render. You have received the money, but you have not rendered any service. You've even eaten the money. This happens to people with handwork. Sometimes they will tell you, before we start the work, give me so amount as deposit. You pay the money, huge amount of money into their account. To come and do the work is a problem. They have received the money, but to come and do the work is a challenge. So the actual amount received for the period will be credited in the profit or loss account as income, while the extra amount received in advance of the service will be treated as a liability in the balance sheet. Yes, it has to be a liability because you have not done anything to deserve such payment. So it's a debt for you to pay. And until that debt is paid, you cannot be free. That's the truth. So the amount that has been received for the period is received into the profit or loss account. But that extra amount that is given to you or given to the business is treated as a liability. At this point, we also want to look at an illustration that can further explain this. I say commission received during the year 31st. All right, commission received during the year 31st December is in 1995 was 14,000. Commission received during the year ended 31st December 1995 was 14,000. In 1994, a sum of 9,000 was received in advance. Remember, in 1994, a sum of 9,000 was received in advance. That means that this 9,000 was actually received in 1994 for 1995. So this 9,000 is something that was received last year. Let's assume that the current year is 1995. So last year was 1994 and we received 9,000 for this year. And then why at the end of 31st December 1995, at the end of this year, 3,000 was received in advance? You are required to calculate commission received for the year, determine commission charged to the balance sheet as a liability, and post the transaction to the ledger. Let's start again. It's called commission received. Commission received. This is a Naira sign. Amount received. Amount received for the period. Amount received for the period is what? 14,000. 1, 2, 3. Then amount received last year, that's advance. You add advance. Advance, that's the one received in 1994. 1994. And then how much is that? It's 9,000. 9,000 plus 14,000 is 25,000. 25,000. Then you are now going to subtract the amount of money that is received, in advance, the amount of money that you have received, that you have not paid. Say, why at the end of the year was received in advance? This 3,000 was actually received for 1996. Less advance. 1995. So you are going to have 3,000 there. So 25,000 minus 3,000 is 22,000. This amount is what will be posted to your profit or loss account. This 22,000 is what will be posted to your profit or loss account. Meanwhile, this one that is received that you have not worked for is your liability. So your liability is 3,000. Your liability is 3,000. Now let's quickly, we've answered question 1. We've calculated the commission received for the year. The commission received for the year is 22,000. Now the commission that is chargeable to the balance sheet as liability is 3,000. Now let's post the transaction to the ledger account. Let's post the transaction to the ledger account. This is now the ledger commission received. Commission received. Commission received account. This is your debit credit side. It's a debit side. This is your Naira sign. So now the amount that is received last year for this year will be credited. Remember, this is an income account. So your balance brought down is how much? 9,000. And then cash, the one you receive for the period is what? 14,000. And then the one that is paid for next year is your balance carried down, which will give you 3,000. So your profit or loss account is simply you add this side, which is 25,000, and then 25,000, subtract 3,000 from 25, you have 22,000. And then your balance brought down is 3,000. So this 3,000 is what will be taken to your balance sheet, which is your statement of financial position, and then your commission received for the period that will go to your profit or loss is what? 22,000. Now let's quickly, now we have looked at what prepayments are. It is now time to now look at what accruals are. Now I explained during the time of prepayment that prepayment is basically payment in advance, but accruals in the other way around is owing. Look at it. I say this is simply benefit received before cash payment. Benefit received before cash payment. You have received the benefit, but you have not made payment. Or revenue that has been earned, but cash has not yet been received. It is either the benefit you have enjoyed, but you have not paid for, or it is an income or services you have rendered, but they have not paid you. So it is categorized into accrued expenses and accrued income. Let's quickly look at what is an accrued expense. I say this is an expense, or these are expenses for benefit received before the cash payment is made. The actual expense paid for the period is debited to the profit or loss account, while the expense owed for the period is treated as a liability in the balance sheet. Let me explain this. Accrued expense can come in different forms. Let's take, for instance, since we are students, let's use our student life to explain this. You are living in one self-contained, and then you've lived from January to December. Your rent has expired. You are expected to pay. You have enjoyed the house, but you have not made payment. Because you have not made payment, that owing is what we call accruals. That is what we call accruals. So you are owing. That's what we call accruals. We said the period, if it is, we take it to the palace of business, the expense that is meant for that period need to be what? Captured. Let's quickly take an illustration to be able to understand this particular concept. I say the financial year of Pretty Enterprise ended on 31st December 1995. Show the ledger account. Electricity paid 31st December 1995 is 450,000. Electricity owing 1st January 1995 is 100,000. Electricity owing 31st December 1995 is 150,000. You are required to calculate the electricity paid for the period, determine the amount chargeable to the balance sheet as current liability, and post the transaction to the ledger. Let's quickly explain this. Okay, now it is electricity. So we have electricity. Amount paid. Now we said amount you have paid for the period. Amount paid is what? 450,000. Amount paid is 450. Now we have two owing here. 1st January 1995 and 31st December 1995. Anything that is owed 1st January is not meant for that current year. It's something that is brought into that year from the previous year. So the 100,000 that is appearing on the 1st of January 1995 is a payment, is an electricity bill that was meant for 1994. So that is not coming yet. Now let's look at electricity owing 31st December. As at 31st December, even if we were able to pay 450, we were still owing 150. So you are going to add owing at 31st December 1995. 1995, this is 150. If you add 150 to 450, you have about 600. This is 1, 2, 3. This is 0. This is 0. And then this is what? This is 6. So you have 600,000. So 600,000 is actually what you are supposed to pay as electricity for the period. But we said that inside the 600,000, now you are owing 100,000 last year. So let's remove the one for last year now. Let's owing of 1st January 1995, which is what? 100,000. So your electricity for the period is 500,000. This is what we go to your P or L. So what we go to your P or L is what? Is 500,000. Now, we have answered the first question. Say, calculate the electricity paid for the period. Electricity paid for the period is 500,000. The question 2 said, determine the amount chargeable to the balance sheet as a liability. The amount chargeable to the balance sheet as a liability is 100,000. This is what you are owing. That's it. No, it's not 100,000. It's 150. It's not 100,000, but it's what? 150. This is what you are owing at the end of the period. At the end of the period. So the amount that is going to your balance sheet is 150,000 as owing. Now let's quickly prepare our ledger as we make progress. So our ledger account, electricity account, electricity account. This is your credit side and this is your debit side. This is your Naira sign. Now, amount that you owe last year that is brought into this year is 100,000. So it should be balance brought down is 100,000. Then amount paid this year is cash. Cash paid this year is how much? Cash that is paid this year is 450. 450. And then the amount that you are owing for the period is what? 150. It's 150. And then your profit or loss is simply, this is 550. 550 minus 150 550 minus 150 is 400,000. This is a 550, 550, 550. So in this case now, your balance brought down is 150,000. Your balance brought down is 150. This 150 is what is taken to your balance sheet as the liability. This is what is actually owing. That is the way it is. This is what we were owing last year. This one what we were owing last year. And then this is what is paid this year. This is what you are owing at the end of this year. What you are owing at the end of this year. And then this is what you are expected to pay. And this is how it should look like. This one is what you go to your balance sheets. Okay, now when we talk about accrued income, I said it's simply revenue earned for services that have been performed or for goods that have been delivered but the income has not been received. The actual amount or income received for the period will be credited to the profit or loss account, while the amount yet to be received will be treated as current asset in the balance sheet. Now, let me explain a little about accrued income. Let me use a salary earner as an example. You work for a company for 3, 4, 4, 5, 6 months and they have not paid you. You work for a company for 3, 4, 5, 6 months, they have not paid you. And then, you have rendered the service, but they've not paid you. So that money, that part of that your salary that has not been paid is an asset to you already. But when you bring it to the palace of business, you have delivered your goods to your customers. They have taken, but you've not gotten the money. So to know the actual income for the period, you are going to ascertain the income that is due you for the period and add the one that you are supposed to receive that period. It is called matching concept in accounting. You must ascertain the profit that is due or the income that is due for that particular period. Now, anyone that is owed for last year is not going to be captured. That's why I said the actual amount or income received for the period will be credited to the profit or loss account, while the amount yet to be received will be treated as current asset in a balance sheet. The one that you have not received is a current asset to you. Now let's take an illustration. This illustration will further explain what we are saying. Commission received during the year 31st December 1998 amount to 500. Owing at 31st December 1997 is 350,000. While owing at 31st December 1998 is 480,000. You are required to calculate the commission received for the year, determine the commission chargeable to the balance sheet as current assets, post the transaction to the ledger. Let's quickly take this illustration. All right, so commission received, commission received. Now amount received for the period. We said December, commission received during 31st December 1998 is 500. This is the amount you receive for the period. Then amount owed 31st December 1997, that's for last year. Amount owing at 31st December 1998, you are going to now add owing 31st December 1998. 31st December 1998 is 480. Which is what? 980. This is 980,000. This 980,000 comprises of what you receive and what you are owed. Meanwhile, by 31st December 1997, you were owed 350. So less owing 31st December 1997. How much is that? 350. Now, when you subtract this 1, 2, 3, when you subtract, okay, so you cannot subtract 5 from 0. Take 1 from here. Let me write it out. We have 980,000. We are subtracting 350 from it. Let's do the subtraction together. 0, 0, 0. This is 0. 5 minus 8 is 3. And then 3 minus 9 is 6. So you have 630,000. So you have 630,000. This 630,000 is what we go to your P or L account. So the amount that you are owing at 31st December, this is what they are owing you. This is what they are owing. This is what should now go to your balance sheet. This is what should go to your balance sheet as the asset. The one that they are owing you last year does not really count because that one is actually accounted for last year. But the one they are owing you this year is what should be taken to your profit or loss account, or should be credited to your profit or loss account. The one they are owing you for at the end of the year is what should be taken to your statement of financial position as your current assets. Okay, let's now post the transaction to the ledger. Let's now just post the transaction now to the ledger. This is now commission received. Commission receive account. Commission receive account. This is your credit side and this is your debit side. All right. Now, the one that we are owing you last year is always your balance brought down. Your balance brought down is always that of last year, which is 350. The one they owe you last year. And then no. That is balance brought down. 350. That's what they are owing you last year. It always comes from the beginning. And then the one that they are owing you, the one they are owing you, the one you receive for the year, cash received for the year, cash received for the year is going to be, cash received for the year is going to be what? 500,000. And then the one they are owing you at the end of the period. At the end of the period, I think I am getting it the other way round. The one owing you for last year is your balance brought down, which is 350. And then this is your cash received for the year, 500,000. 500,000. And then the one they are owing you at the end of the period is your balance carried down. Is your balance carried down. Let me explain something. All right, let me explain something. Now, commission received during the period 31st December 1998 is 500,000. This is what you receive for the year. Now, owing at 31st December 1997 is what is owed last year. And then owing at 31st December, this is what is owed this year. So whatever is owed this year is always your balance carried down. Is always your balance carried down, which is what is owing you this year. What they are owing you is 48,000. 48,000. That is the way it should be. Then the one that they are owing you last year that you have received is your balance brought down, which is 350. And then your cash that is received this year is 500 to 3. So your P or L is simply 850 minus, so you have 850 minus 480. You are going to have 1, 2, 3. This is 15,700, and this is 3. You have 370,000. You have 370,000. So this 370,000, and then your balance brought down is simply 480,000. I think this is the right thing. So this is what you receive within the period. This is what they were owing you last year that is brought into this year. And this is what they are owing you at the end of this year. So this is it. So when you add here to here, you have 850,000. When you subtract 850,000 from here, you subtract 480 from 850, you'll be left with 370. Let's make the confirmation again. 850, 1, 2, 3, minus 480. Let's confirm our figures. This is 0, this is 15, this is 7. 4 is left here, you have 4. So it's going to be what? This is 4, this is 7. 1 from here to here is 15, this is 7. You'll be left with 7 here. 7 minus 4 is 3. That's 370. We are correct. We are correct. So that is what you have as your the value that you have received for the period, and then the one that will go to your statement of financial position as your asset. Current asset is 480. That is it. So far, we have gradually come to the end of this lesson, and I will also encourage that students should go to the Examguide to look for trading profit or loss account, because basically this is an extract of trading profit or loss account. You can always see a trial balance. The list of balances will be given to you, and in the additional information you will see something like rent owing. You see rent that is paid in the trial balance. You see rent that is owed in the additional information. When you see something like that, you add what is in under the additional information to what has been paid. Then when you see prepayment in the additional information and you see payment in the balance sheet, you subtract. That's just the way it is. All right, now I encourage students to make out time to solve as many problems as possible.